Good afternoon. It's Jeffrey Christian of CPM Group. It's about 4:40 on Monday, the 7th of July. We're filming this afternoon, and we'll try to release it on Tuesday because of our schedules in terms of where various people within CPM Group need to be. I want to talk today about precious metals markets and central bank gold activity and the BRICS summit, a couple words there. Before I get into that, precious metals prices were very volatile today, especially silver and palladium. And that seems to be because the markets were focusing on very mixed economic conditions and prospects and outlooks. And there's a view that the Trump tariff policies, which are supposed to be something or other on Wednesday, that the Trump administration will continue to waffle. And in fact, today it continued to waffle and just sort of change its schedule and change its rules and be very arbitrary. And that's problematic for anybody who really wants to try to plan their business or their markets or their investments and such. So what's there? But, I watched the White House Chief of Staff on a Sunday morning news show, and he was incredibly deceitful. And he was talking about how they asked him, gee, everybody else seems to think that these the big beautiful budget bill is going to blow up the deficit, adding anywhere from $3 to $5 trillion to an already bloated deficit spending over the next 5 to 10 years. And his comment was, they have bad models. They have models that are predicated on lower GDP. But our model, which, let's be honest, is non-existent. No one in the Trump administration knows how to make an econometric model. Our model, he said, shows us that accurately and realistically, we will have more than 3% real GDP growth in the future due to our budget changes and our spending and our tax cuts. It's the same sort of supply side economic, voodoo economics, as George H. Bush called it, that Reagan ran on in 1980. And it didn't work out then, and it won't work out now. But there's the lie, right? We haven't had 3% real GDP on a sustained basis. You could say that we had it for a few years, like 4 years during the Clinton administration. You could say that we had it for about 3 or 4 or 5 years during the Reagan administration. But if you really want to be a stickler about it, as this chart shows, we really haven't had real GDP sustained above 3% since the 50s and 60s, right? And we're not going to get back there because to think about what the economic realities were globally, when the United States was 45% of world GDP in the post-war period back then, compared to now when we're down to about 22%, we're just not going to get there. We don't have the economic wherewithal to get there, at least not for several decades. That's the deceit that allows them to try to perpetuate the lie that giving tax cuts to wealthy people, $1 trillion of the tax cuts will accrue to the top 1%. Something less than that will accrue to everybody else. That's the deceit. So it was pretty interesting. And that's the kind of thing that really makes a lot of people think that they can believe anything that the U.S. government tells them. So gold today, when we were preparing this, it was the gold price was around $3,347. It was up about $4 on the day. It started the day falling $26, $32. And then it came back in the afternoon as markets calmed down. And, our expectation is that the price of gold probably will move sideways with a little bit of a downside bend over July and August. And we may be seeing the beginning of that. We're not quite sure because August is an active COMEX month and there is a tremendous amount of economic uncertainty and anxiety and high risks abroad in the global economic and political environments. But that's where we were today. Silver prices also were very volatile today. At one point, they were off very sharply. They were ending the day around $36.95. That was off about 14 cents, but quite frankly, they had fallen even more sharply than that during the day. As I said, silver and palladium were particularly volatile today. We think that that reflects a couple of factors that are fundamental to those markets, including their industrial uses going into these summer months. Platinum prices, they were off 40 cents at the end of the day. They had been off much more sharply during the day, but they closed the day around $1,381. But they're starting to show the sign that this spike that we saw in June, from early June into the end of June and early July, the spike may be beginning to deflate. So we have to wait and see how that is. And then palladium also came off. It was off $26.70 at $1,121. When we did our video on Thursday last week, it was off $26.10 at about $1,141. So again, it seems like this spike that we saw in June seems to be coming off a little bit. Now, I wanted to put in some data on central bank currency holdings, but I didn't have time to do that today, and I apologize for that. But I'm hearing people talk about dumping. Well, I'm hearing gold marketing hypesters talking about how central banks are dumping currencies in general, and that's not the case. Currency holdings by central banks, foreign exchange reserves, continue to rise, and U.S. dollar holdings by those central banks continue to rise too. But let's focus on gold, because this is supposedly a gold video, and there are viewers who don't understand that currencies and economics and politics might also be important to understanding the gold market, but that's beside the point. Central bank holdings of gold, January through May, the first 5 months of this year, you saw about 5.3 million ounces of gross additions to central bank holdings, and you saw about 1.2 million ounces of gross sales during the first 5 months. On a net basis, about 4.1 million ounces were added to central bank monetary reserves of gold, which annualizes to about 9.8 million ounces. And we have been saying that we thought that, our published figure projection is about 10 million ounces for the year. So we're right on level for that. China has not reported for May. Everybody else, the data is through May. China is through April. So we don't have the Chinese figure. In the data that we have, there were 15 central banks that added gold in the first 5 months of the year, and 7 central banks that reduced gold in the same period of time. Looking at just May, there were 4 central banks that added gold: Russia, Kazakhstan, Poland, and Austria. They added a total of about 1.4 million ounces, I believe it was. 63% of the gold that was bought by central banks in May was bought by the Russian central bank. And it continues to buy and sell gold to help finance the government and to finance the war effort. The others bought relatively less. Only 2 central banks sold gold or reduced their gold holdings in May. Germany, about 27,000 ounces, and Uzbekistan, about 30,000 ounces. So you can see on the bars chart on the right-hand side here, the very little red, the gross sales, and very pretty much the same as a little bit down from April, a little bit up from March in terms of gross sales. Another topic that's hot this week, and you'll hear a lot of nonsense about it, are the BRICS. The BRICS nations are having their annual summit in Belém, Brazil this week. They have in their agenda that their primary focus is on reforming the IMF and the World Trade Organization. That's what they've said they want to talk about. They also say they want to focus on and strengthen climate financing. They're very much interested in climate problems and looking to finance efforts that could reduce the climate crisis. There's no mention of gold or BRICS currency in their agenda. Xi and Putin are both skipping this year's summit. I put in a link here, which is a little piece of it. Note that the BRICS plus analytics.org, which is where this piece comes from, it's not part of BRICS from what we can tell. The BRICS official website has yet to post its statement of what it believes. So we have this today. Take care of yourself. Take care of those around you. Try to do something good for the world. And we'll be talking to you later in the week.